The generalist investor becomes enticed with the precious metals narrative. When the generalist investor comes into our space, market leadership, and I'm not sure why, I suspect it's the lower unit price, market leadership switches from gold to silver. I've watched it happen 3 times before in my career. Hemingway once was asked, the author, how, despite all the money he made writing books, he went bankrupt. And he said, slowly at first, and then all of a sudden. My friend Brent Cook, who I believe you know, spectacular geologist, trained in finance under me, so I think he was well trained, was saying, I've been hearing you gold bugs talk about the impact of debt and deficits for 40 years, and nothing's happened. Why should I believe you now? So I'll tell you why. In 1982, on balance sheet liabilities of the United States, which is to say the debt that we owed bondholders, was 30% of GDP. Now it's 120% of GDP. In 1982, the start point referenced by I'm not being sarcastic, by my friend Brent Cook, the net present value of off-balance sheet liabilities, which is to say entitlements, Medicare, Medicaid, Social Security, was about 1 times GDP. Now it's 4 times GDP. Aggregate liabilities in the United States on balance sheet and off balance sheet are the equivalent of 4 or 5 times GDP. What has changed is that we're running out of string. Now, what has happened in the last 50 years, really, is that the dynamism of American society, our ability to produce a society where 4 or 5 kids take over a garage in Sunnyvale and out pops Google or out pops Apple or out pops Microsoft, has meant that we can enjoy economic growth with less capital investment than at other points in time in our history, and frankly, in other countries. We are a high margin economy. What I would tell my friend Brent Cook is that for 40 or 50 years, the creativity and tenacity and brilliance and hard work of the American individual has funded our collective stupidity. But it gets increasingly difficult to do that. And I think the people who say that deficits don't matter are the people who, like Hemingway, went broke slowly and now are going broke all of a sudden. I would urge your listeners, and I'm sorry to beat this to death, but this is the most important issue of our time, I think. Many voters, those who are numerate at all, confuse solvency and liquidity. It's as though in US dollar terms, they're making 60 or 70,000 a year, but they're $1.2 million in debt. They have $10,000 in their jeans, so they can buy a cup of Starbucks. They're liquid, but they're not solvent. Those are very different words, liquid and solvent. The US is hugely liquid on the private side, but we're insolvent on the public side.
Yeah.
And that's something that the whole world has to understand. The US dollar is and will remain for my lifetime. For reference, I'm a healthy 72-year-old. The world's reserve currency, but American hegemony will be reduced. I believe that the US dollar will continue to perform reasonably well relative to other fiat currencies. But in an absolute sense, I would be very surprised if the purchasing power of the US dollar didn't decline by 75% over 10 years.
Well,
There's a prologue for this. That's what happened in the decade of the 1970s. In the 1970s, 1970 to 1980, not according to some cranky old libertarian named Rick Rule, but rather according to the U.S. Congressional Budget Office, then called the Office of Management and Budget, the purchasing power of the U.S. dollar declined by 75% in 10 years.
Mm.
Not coincidentally, the gold price ran from a price-controlled $35 to $850. Now, the latter number was stupid. That involves speculators being as dumb as speculators always are at the top of the market. But it wouldn't surprise me if the nominal price of gold rose by an amount that is commensurate with the deterioration in the purchasing power of the US dollar. Down 12% against a coalition of lies. Understand that your currency, the pound,
Mm.
the euro, the Swiss franc, the yen, the renminbi, they're all floating abstractions.
Oh, yeah,
Uh,
yeah.
some of them are floating abstractions behind very good franchises, and some aren't. I'm much more interested in the uh, relative declines in purchasing power behind these fiat abstractions. The fact that the US dollar does well against the Canadian dollar or the Australian dollar or the yen or the renminbi is an amusement to me. But what I'm concerned with is maintaining the purchasing power of my savings
Mm.
and having society maintain the purchasing power of their salaries and savings. And that is going to be a real challenge in the next 10 years. Yes, there's a risk, but it's an acceptable risk relative to the guarantee on the other side of the transaction.
Yeah.
I personally save in gold, but I maintain a lot of US dollar liquidity.
Mm.
I think those are very different topics. I know that my US dollar liquidity is costing me purchasing power.
Yeah.
I get paid, what, 4.5% in a little less, actually, 4.3% in very short term treasuries in a currency where my purchasing power is declining by 7.5 or 8% a year. So my liquidity is costing me 3.5 or 4% a year. I get that.
Mm.
I am willing, although not happy, to accept that negative yield because I consider the negative yield to be an option premium. If I have liquidity and
Mm.
we have a liquidity induced market squeeze, I will take advantage of the circumstance rather than being taken advantage of. I remember well the year 2009 after the 2008 collapse. I went into that psychologically prepared and financially prepared. The consequence of that is that 2009 was the single best investment year of my career. And I believe personally that the negative return that I receive on my liquidity is, as I say, an option premium, giving me the ability to take advantage of economic turmoil rather than being taken advantage
Mm.
of. No, I was saying that gold is
You were talking
indestructible.
about
Gold.
the gold
Malleable.
chart.
Yeah, yeah. Yeah, yeah.
Yeah, I was saying that gold is indestructible. The truth is that there are no certain answers in life, other than, of course, death and taxes. What you do is you look at the circumstance that you find yourself in and you speculate in probabilities. I don't know enough about Bitcoin. I don't have any durable competitive in terms of my knowledge about Bitcoin relative to other participants. So I'm not in that market. We certainly measure the price of gold in the floating abstraction that we live our
Exactly.
lives that we live our lives in. In other words, we base our sense of the price of gold on a floating abstraction. You have to deal with that in your life. I uh, coming in to the 2000s, I sort of sat down and I had a talk with myself. I said, this is what you've done. This is what's worked. This is what hasn't worked. What are you going to do with your life, with the rest of it? A pretty thoroughgoing conversation. And one of the things that I decided, gold was very cheap then, 250 something dollars an ounce. And I'd gone through the ups and downs of the gold price. I reread Aristotle and I paid some attention to gold markets in my lifetime. And I decided that one thing that I would do is keep an alternative set of books for myself and my family. The official set of books, the ones that I pay taxes on, are denominated in US dollars, of course. But I began to systematically save in gold. And I began every year to recharacterize my assets, my liabilities, my savings, and my expenditures in gold. And that's been an extraordinarily useful uh, exercise for me. When people say to me on podcasts like this, or they don't say it now, but 2 years ago, they say, well, or 3 years ago, when's the gold price going to move? And I could look at them with a very straight face and say, well, the gold price is going to move in 2000. It has increased in price by 8.5% compounded for the last 20 years. That's correct. If you denominate your life in gold, what you see is that real pricing, in your terms, is decreasing.
Mm.
Rents are decreasing. Health insurance is decreasing. Groceries are decreasing. Gasoline is decreasing. Uh, it's very interesting, and it makes you particularly questioning of maintaining your liquidity in US dollars. It calls into very, very, very stark contrast the difference between the true yield that you receive and the deterioration in the purchasing power that you experience in fiat currencies. It's a wonderful consciousness raising exercise. I do, which is stupid for me. It's stupid because my life is tied to gold in so many ways. I'm still the largest shareholder of Sprott, which I would suggest is one of two worldwide brand names for precious metals investment. To the extent that the gold price does well, my Sprott stock will do spectacularly well, which it has. I also have a disgustingly large percentage of my portfolio in gold mining stocks, but that's my trade. That isn't just an investment. It amuses me, and speculation in natural resources is how I ended up with an economic surplus to save in anyway. If a rational financial planner looked at my portfolio, even assuming that financial planner was not unsympathetic to gold, he'd say, Rick, you're out of your mind. Your income will go crazy in the kind of gold market that you're forecasting. You don't need to own gold to protect yourself. But the truth is that I believe that the essence of money, the essence of wealth is enhancing your sense of well-being. And I can tell you from the bottom of my heart that gold helps me sleep nights and stay calm. And that's a wonderful attribute at age 72. Sleep doesn't come naturally. In my experience, precious metals bull markets are led by fear buyers. They're led by gold. When the momentum in the gold price first moves the best gold equities, which we've seen in the last 18 months, and then moves down to the mid-tier gold equities, the generalist investor becomes enticed with the precious metals narrative. When the generalist investor comes into our space, market leadership, and I'm not sure why, I suspect it's the lower unit price, market leadership switches from gold to silver. I've watched it happen 3 times before in my career. By the way, when that happens, you won't need Rick Rule to tell you that it's happening. It will be very, very, very obvious. As I say, I don't know why leadership switches to silver, but it does.
And when do you envisage this happening? Because I mean,
I have no idea.
But it looks very much like it's set up in exactly the way that the last 3 times have happened right now.
I agree that the setup is in place. I think we're in a precious metals bull market that is likely one for the record books. More dramatic than the 2000 to 2010 market, more dramatic than the 1998 to 2006 market, for the reasons that we talked about at the beginning of the show. And I'm reasonably certain, although I don't know why, that history will repeat, in the sense that at some point in time, the generalist investor, who, by the way, does not yet know how to spell gold, will come down into our space. And when they do, I would suspect that the price appreciation that you will see in silver will be as dramatic as it has in the past. And when I was a younger man, ironically, I had more time on Earth and I was less patient. I concerned myself a lot with the why question, or not the why question, I'm sorry, the when question. I, like everybody else I observed, had a track record unblemished by success in terms of anticipating the when. And I remember reading a Warren Buffett quote in one of his wonderful annual reports, where he said that forecasting markets is a complete waste of time, that you can allocate 15 or 30 minutes, a week to it for your amusement, like you do the crossword puzzles. But devoting more time than that to it was, quote, trying to know the unknowable. So I don't do it. I concentrate on asking myself questions where the answer begins with when, not if. And I understand that if I speculate in probabilities where the upside is truly spectacular, the when becomes less important. Let's say that I believe that gold will take out its former, or silver will take out its former all-time highs in real, not nominal dollars. Okay, that it will take out its all-time highs in $1980. In fact, let's say that I think it'll only go to half its all-time high in nominal dollars. That means that the silver price from here triples or quadruples. Now, while I would like to know when that's going to occur, I can't. If I got a quadruple or a triple in a year, would that be good? How about 2 years? Would 3 years be a sufficient amount of time to wait for a triple or a quadruple? The truth is that people who can't familiarize themselves with those probabilities are people who would be best off still believing in the tooth fairy.